name's Bobby Jones. Glad to have you guys here for our monthly meetup of, creating a plan B through apartment investing. And got a couple CRNAs with us here. We've got Crystal Gibbs and Grant. Is it Carruthers? Is that
Yes, it is. You got it just right.
Perfect. So, and I'll let you guys kind of introduce yourselves a little bit. I don't know if you guys know each other or whatever, but yeah. So go ahead, Grant. You were starting to tell us about some cool stuff you've got going on. So I'll let you keep on.
Happy to bring you up to speed. So I'll try and keep it relatively short and hit the important parts, but I have a partner that I met through motorcycle racing, and we started buying and renting vacation properties in Whitefish, Montana about 6 years ago. Nice. With his business, he had been traveling the country and living in RV parks because he tends to work a market for a couple of weeks at a time and then move. And so he had been working up the economics of doing an RV park. So we started looking for land to do a project in the Whitefish, Glacier National Park, Kalispell area in Montana, and got very lucky just at the start of us recognizing a housing boom that was already initiated. We got some land under contract, and that turned into buying a second property next door because it was going to make the first property more advantageous, and we were able to secure it off market for a very good price, considering the appreciation that's going on in the area. Mm-hmm. Long story short, we're developing 60 acres that will be 20 home sites, and we just hit phase one, and we've got our first two new home sites coming online. They're up for sale now. We have them on market. The final deeds will be coming out in the next month or so. But now that we're through enough of the government process of getting them separated from the 60 acres in individual deeds, we can list them. So we have those two on market. And then the original house that came with the second parcel of land was one of the other lots. So phase one is 3 lots, the original house and 2 new building sites. We just found a renter for the house. We were coming into the winter season. It's kind of hard to make sales in Montana. Things slow down a whole lot with winter coming on. And we found the perfect renter / buyer for the house. He doesn't have the ability to buy it right now, but he is very interested in it. The house comes with a commercial garage of pretty significant size. It's about 30 by 60. Mm-hmm. And he actually has use for that. So finding a buyer that had use for that kind of commercial space along with a house was a challenge. And we're going to do a lease to own to him. And we have our first month's rent from him, and we have agreed on terms, and we'll have it officially under contract very shortly. He was in a hurry, and we accelerated the rent before having an official contract, but we had agreed on terms. And so we're just drawing up the legalese and getting that taken care of. And before the second month's rent, we'll have that on paper. But anyway, cool. So we just developed enormous cash flow. Our mortgages on all our different properties are about $8,000 a month, and we just rented the house and the shop for $5,000 a month. So we just covered 5/8 of our mortgages on that rental alone. Mm-hmm. And one of those properties that accounts for some of that mortgage debt is the vacation condo, and we're just coming up on ski season. So between the two of them, we're going to cash flow nicely and be able to get to the spring, and we'll hit phase 2 probably in about 6 months, which is going to be an additional 6 lots for sale. So anyway,
very cool. Very cool.
The exciting news for us is that we got some cash flow out of the first lot with the house and the shop. And it's going to get us through the winter nicely.
Yeah. So now, how long of a project is this? How many years out do you guys plan for this?
So there are minor and major subdivisions. A minor subdivision you can push through a little bit more quickly. Essentially, it comes down to how many wells are you trying to put on the reservoirs. With a minor, it is up to 5 or 6 lots. So phase 1 was a minor with the 3 lots. We can do that relatively quickly. It involves proving that the reservoir will tolerate the additional well usage. Each lot's going to have its own well. You have to do soil testing, and that has to be done in a certain season. So basically, they dig a hole, put a pipe in the ground, and measure the groundwater to make sure there's not going to be groundwater issues. That has to start in March, and it finishes up around June. So a minor subdivision is a little bit quicker because there are some ways to prove the water capabilities of the reservoir based on studies that have been done previously and triangulation of wells around you. Mm-hmm. So we did a minor subdivision for phase one, mm-hmm. and that's the 3 lots I discussed. And that's about a year process, we're hoping, mm-hmm. and that's about what it's coming in at. Eventually, phase 3 is going to be a major subdivision, which is phase 3 is going to be about 14 or 15 lots. And one of the issues with major subdivision is it puts you before the county board, and neighbors can object to you putting in that many wells and stressing the water reservoirs and whatnot. So you have to do all the soil studies, which basically comes down to how everybody's going to do their septic. So each lot is going to be deeded for a well and a septic system, specific type of septic system based on the soil sample study that we've done. So anyway, long story short, about 2 years for the major subdivision and a year for the minor. So phase 1 and phase 2 are both minors, mm-hmm. And phase 3 is going to be the major.
Yeah. So I'm just not as familiar with land development. So that's why I'm kind of asking questions about it. Cause it's, just something that I'm kind of starting to dip my toe into more of an understanding of it. What I do is I try to offer, various alternative investments to people. And so, multifamily, is one of the easiest for people to get into. There's a huge network of multifamily buyers and sellers but as that the markets there, depending on where you're at, cap rates are compressing everywhere. Things are getting a little more expensive, and that's squeezing some of the profits. Now there's still great profits to be found in multifamily, but I like to try to get ahead of things and just get ahead of the curve and try to have, things set up so that, if I need to pivot to other things that are offering better returns for investors, then I can do that and offer those different kinds of things. So, one of those pivots that I'm making right now, because I have a multifamily that I'm currently raising capital for, and it's a great deal, but it's only for accredited investors. And so not everybody in the CRNA community is an accredited investor, and so that's where it's like, okay, well, I want to have some different deals that other people can get into. Mm-hmm. And so, one of the things I'm looking at now is self-storage, and I've got some good partnerships set up and a deal that's about to come out for that as well. But I had another operator who is out in Idaho contact me about a potential, well, it's a deal that they're moving forward with, but it's like yours. It's a development project. It's phased neighborhood and apartment development in a community. They're creating like an entire community. And the returns on it look great, and it's going to take different phases and so the earlier you get in, kind of the better your returns are expected to be, and things of that nature. But but yeah, I mean, it's just, I did not realize how lucrative getting into some of this land development can really be. You have to have a longer time frame, mm-hmm. But man, it can be really lucrative. I should have known. My grandfather did land development and he was very well off, but that was years and years ago. So
yeah. The neat thing about the land development, like I said, we just kind of lucked into it because we were already looking for land. The first parcel we purchased was put on the market in our realtor's office. He already knew we were looking for land. we had it under contract 30 minutes after it hit the market. By the next morning, there were 8 offers behind us. That's how hot this market is right now.
Man.
And then the second parcel that took us from 20 acres to 60 total, we got that off market for a very reasonable price. Rough numbers on this, we're hoping that we're going to be into it on land purchase. We have to put in the surveying and the engineering, which basically proves the water and the soil and septic. We have to put in the roads and the utilities. So basically, we go through all the process to get the deed. We put in the road and we put in the utilities, and then we sell them. We're not doing any construction unless I hold back lots for myself to build on myself and, sell a spec house essentially. I don't know if I'll get into that, but we're going to have a fair amount of capital to work with, so we might do some of that toward the end of phase 3. And as far as multifamily, about the same time I was getting into multifamily also, I moved several of my retirement accounts into a self-directed IRA, and I've got them 100% deployed in syndications right now. And I don't know if you're familiar, probably you are, I don't know if Crystal is, but Leslie Owassum and Excite Capital. I'm in on 2 of their projects. I think one of them, they're kind of the primary, and one of them, they're a secondary. I think Viking Capital was the lead on the second one.
Yeah.
But I kept my wife's retirement accounts in the market for the time being, and I moved about 80% of mine into syndications. So.
Yeah, that's kind of similar to, well, I mean, I took mine out of a lot of my retirement accounts just to create cash flow.
Sure.
So that's what I've done. And in 2 years time, now just this month, or next month alone, I'm having 2 of those properties that I bought within the last 2 years come full cycle, and they're selling them, and I'm getting I'm going to actually 1031 them into newer deals and just keep the cash flow going and keep the growth going. But
Very
both
good.
of those are, one of them was a 1.7 multiplier in a 2-year time frame, and the other one I think is expected to be similar to that, 1.8 maybe.
1.7 in a 2-year timeline is fantastic.
Yeah. Well, I mean, the projects themselves were projected to be 2x in 5 years, so I'll take nearly 2x in 2 years. I'm
not going to get that with the market.
No.
Even with as good as the market has been, you can't count on anything even remotely close to that with the market. So I'm really happy to have, between my wife and I's accounts, we'll say 25-30% of our retirement is in syndications right now. And during the year that I've been getting into those projects, I've been getting educated on it and kind of figuring out where I might fit into operating in this syndication market as well.
For sure.
Doing some studying with the Excite Capital group. They do some underwriting classes, which are really strong educational offerings, and trying to kind of dip my toe in and see what all I can find as far as there's so many niches and so many jobs to fill in syndications. I don't know that I'm going to be a capital raiser. This is about as much as I ever talk in my life, and I don't see myself as the salesman bringing in the cash flow and having the networking to have 500 contacts to bring in the capital for a project. But I'm the capital guy on the Montana deal.
Okay.
So.
Well, and I'll say too, I mean, like, some of it depends on where you live, and you can, if you're in a good market or something, you can, or surrounded by some good markets, you can kind of be boots on the ground for people and take care of things like that. So it just depends on where you are. But now, Crystal, the guys have been talking a lot, so I would love to get some of your input and get just let you tell your story a little bit, what's your experience and stuff. And
sure. So I'm probably where you guys were. I don't know, how many years have you been doing this? Go back that far.
Okay. Yeah. So starting out.
Very new. Yes. So backstory. I'm a CRNA. I've been a CRNA for almost 8 years. My husband's a CRNA as well. He's been one for almost 7 years.
Okay.
Last year during COVID, we paid off our student loans. So yeah. Hey.
Yeah.
So now that we have all of this extra money, we're like, what are we going to do to save it? Because we had already maxed out our 401ks. It's like, what can we do? So I started, he goes off in mountain bikes. So while he's gone, I started studying commercial real estate because what else? I don't know. Just pick something. So I got one of those like commercial real estate for dummy books, and I've read a bit of it. And he goes to a lot of ski resorts, especially in the summertime because they turn them into downhill mountain biking parks.
Oh yeah.
So he found a condo at a ski resort that he likes to frequent, and he's like, I really want to take you down here. I want to show you around. Like, let's go look at it. I'm like, oh, okay. Of course I'm going to like it. Like, what do you want me to say? So we decided to get our feet wet, and we made an offer last week on a condo that was accepted. So we are going to be doing hopefully the whole little Airbnb route with our little condo.
Yeah.
So yeah, that's exciting. I made an LLC. I did everything through the Small Business Development Center at my local college.
Okay.
So it was really inexpensive and really streamlined. I'm just waiting for like the final paperwork to come back from the state for like officialness, but I already have like my EIN set up. I already have the LLC like filed. They just have to send me like my certificate or whatever.
Yeah.
But yeah, so that's happening. And then it's kind of, how things like happen all at once, right?
Yeah.
And like, call me stupid because I really want somebody to tell me you're retarded. Don't do this. Like, please stop. So yeah.
That's how I got started 6 years ago, was a vacation rental on a ski mountain.
So that's, so we work out of town, and in the town that we work in, not the town that we live in, we found for whatever reason, I've been on LoopNet, like just looking at commercial buildings because I really want to do commercial real estate. I don't know why. I just, anywho, my husband sends me this link and he's like, hey, I found this. And I'm like, okay, it's 14 condos. Just tell me if this is weird. They're each 30 grand. So they're selling them as a bundle for like $420,000. And I'm like, that seems really cheap. Now, mind you, where I live is kind of like lower income, not like the greatest income driven area. So I look into it and I'm like going back in the real estate like listings. And I'm like, why was this listed 2.5 years ago at like 725? And they've come down like every year. And now they're down to like 420. So like, what's going on? But it's this guy moved out of state and he just wants to offload his shares of this condo association that has 31 homes. So if you buy all 14 of them, you're the majority shareholder in this condo association. And the rent isn't like the greatest. So I have like the little APOD thing that the bank sent me, and I'm filling in the numbers and I'm like, these don't make sense. I'm like, called the bank back and I'm like, tell me I missed a number. Tell me I screwed up, because like the cap rate on this doesn't make sense to me. Why would anybody buy this? And so the bank ran it and he's like, yeah, no, nobody in their right mind's going to ever buy this. Like the cap rate's like 2.8%. And the cash on cash is like -11. Like it's just the numbers don't add up. The bank's like, we're never going to give you a mortgage for those kinds of numbers anyways. Like, so I called the listing agent and I'm like, hey, like, just wondering, why did the owner decide to pay all of the association dues himself, not pass them on to the renters? Like that doesn't, I get it, but I don't get it. Right. Or like maybe at least make the rent a little more to cover it, because the rent and the HOA fee, they're like, it's like half the HOA fee. By the time you do all of like the insurance and stuff and everything you need to cover, like you're making like negative money.
Mhm.
And she was like, oh yeah, well, they don't make very much. And it used to be a 55 and older community, but it's kind of turning over. And I'm like,
Mm.
okay, what does that mean? Like, so it's like really exciting to see like 14 condos all at once. And then you do the numbers and you just get kind of defeated because you're like, oh, I found something good.
Yeah.
If the numbers were like way better, no wonder nobody's bought this. So I
Yeah.
guess I'm just a little frustrated.
So I'll go. Grant, you seem to want.
He's
I'll let you.
smiling, he's like,
Grant,
"Please
go ahead,
don't
man.
Chomp at the bit. Knock me down.
No, no, no.
My
It's not
vast
knocking
8
down.
months of underwriting experience, they tell you you have to look at 80 deals before you find one you're going to want.
All right.
So if you looked at one and the numbers don't work,
Yeah. I looked
You're-
at 14 because I
Yeah,
did
okay.
all the individual numbers.
Yeah.
We're counting 14.
Okay. Oh God, I'm first off, you got to look at a lot of projects before you find something that's not a total disaster.
Yeah.
I almost bought a 18 unit complex, apartment complex recently, and till I got into the inspection and found out that there was so much deferred maintenance and so many problems that I'm not even sure the owners knew about, because I think they breezed through their inspection and they might have gotten into it without realizing how much trouble there was with it.
Oh, wow.
Anyway, so my thoughts are, how quickly can you rent it?
They're all currently rented.
okay. So that tells me that there might be room for increasing the rents. What are the rents in the other units in this complex? Are they exactly the same?
Yeah, I just have the like rent rolls for the ones that they're selling. I don't have the rent rolls for the other 13.
I would see if you could
19.
find one of those other units that's on the market for rent and find out what they're renting and what they're doing with the HOA and see if this person is just massively losing their tail.
Yeah. So here's the interesting thing about that is the same person that listed the listing is the property manager and the one who collects all the rent and who does like for like 5%. That's all they're charging these people.
Mhm.
And I'm like, 5%? Like usually it's like 25%. Like, why are you so cheap? I didn't want
Well,
to
so normally it's about 10% is what you'll find. But
yeah.
the thing is, if they're only making 5%, then what incentive do they have to improve things?
Yeah.
So they already aren't making much on it. So here I have a few thoughts. So first off, LoopNet is a great website to go and look at deals and kind of run numbers on them. Sure. It's not a great place to actually find deals because
where do you find them? Because I can't find them anywhere other than LoopNet.
Here you go. So
all right.
So this is where the relationship building comes in. If you're looking to be more of an active investor like this, you have to start building relationships with brokers.
Okay.
If you're going to be trying to find deals. So calling brokers in the markets that you're looking at and being specific with them, saying, hey, you know what, I'm looking for properties that are, between 8 to 20 units, or I'm looking for units or a unit size of 50 to 70, whatever it is that you're looking for. You have to be specific because, some people will go as a newbie and they'll say, oh, you know what, just send me all the multifamily you have, like, and brokers will just write you off because they know that you're not experienced and you don't know what you want. Sure. But if you can tell them what you want and what you're looking for specifically, I'm looking for B class, 8 to 20 units. My husband and I are looking for cash flow and something that's not too crazy. Or, hey, we're looking for something that can be a big time, we're looking for potential. We're looking for renovation. We want to get our hands dirty. Whatever it is, let the broker know. But get in contact with a couple of the commercial brokers in the area and just let them know that you're looking and get on their lists. And then when they send you a deal, run it through your thing and then get back with them and say, you know what, I looked at this. Here's what's, what I'm seeing with it. This is why it doesn't fit our criteria. Or, hey, you know what, this one does fit our criteria. We're really excited to potentially put an offer on it. but getting back to them and letting them know what you're seeing, and how you're evaluating it helps them know that A, you're serious about what you're doing and you're actually looking at their emails. And two, that, it allows them to be able to maybe find something, keep an eye out for something that would fit more of your criteria. They get to know you better. It's a relationship development thing.
Yeah. And I'm actually really excited with the bank we got into, because the guys there are really experienced, and they sat with me for this little condo deal. They sat with me for a whole hour. They walked me through how to do this whole APOD. Like, I don't know. He sent it to me. He's like, did you fill it out? And I was like, I looked at that and it was like reading Chinese. So no. But now I know how to do it. It just took someone explaining it. So
Baby
steps. And I'll say too, another great thing to do is, meetups like this one, and there are plenty of them out there. You can look for your local commercial real estate associations. They'll likely have weekly or monthly meetups. Going there and getting to know people, because a lot of those folks, I've been in some meetups, and I found a guy that was looking to offload. I think he had a dozen units in Fort Valley, which is Fort Valley, Georgia. My old, I used to go to high school there. And so I was like, oh, that's kind of an interesting. It's near the, Fort Valley State College, and, but he deals in huge properties now. But he's like, a lot of these people, they have smaller properties on the side just for cash flow. And eventually they say, well, I'm kind of tired of doing the little stuff. I just want to take that and put it in a syndication and not have to worry about managing this. But it's a great opportunity for other people who are looking for, what, maybe I'll just get, I'm just looking for units. So if I can get up to 30, 40 units, I got enough cash flow and I'm set, and so it just depends on what you're looking for. But putting yourself in the room with people who are talking this kind of stuff, it can be really helpful.
I was really excited about the ski condo, and it kind of spiraled into, okay, we'll look at other ski resorts that we've gone to that we like to go to. And then you just start puking at the numbers, and you're like, oh, how does anybody afford to do this? I don't understand. Like, I'm pretty well off and I can't afford to do this. So like, how do you even, like, I could take business loans, and I wanted to do things like the right way, right? Like I wanted to take my first business loan, and I'm probably stupid for doing it this way, and there's probably better ways to do it, but I like, whatever. I'm just jumping through hoops that I was told to jump through. So I don't know. It's just, it's scary and exciting all at the same time. And I was really glad to see, this thing pop up on that investment page.
Well, and I'll say
it's
too,
just nice to talk to you.
I do have some other resources for you if you're thinking about short-term rentals and stuff like that. I thought I had sent you stuff, but I must have sent it to somebody else, and that's why. Okay. But what I'll do is I'll send you a friend request on Facebook, and then I'll just send you some stuff. But there's a couple of folks, and actually I'm thinking about reaching out to them about being on my podcast, because with what they offer, it's just such different ways to think about real estate and how you approach it. And so many people who are looking to get into real estate in the CRNA community are looking at short-term rentals. And you can create a really cool portfolio of short-term rentals without actually owning the properties, or, taking certain steps to where you can protect yourself and also take care of the owners of those particular properties. So cool. It's a different way to think about it. Instead of having to go buy those properties, you can say, look, I can get you rent that's going to cover that. And, you have a proposal. You say, hey, look, I'm going to, offer a furnished rental. So I'm going to come in, I'm going to furnish the place, I'm going to take care of it. You won't have another tenant who takes care of the property like I do. It's going to be spotless. We'll run it as a vacation rental or a short-term rental, however, whoever wants to come stay. But, the idea is that, okay, well, I'll pay the rent that you're asking for, and I'll give you 20% of the extra that I make on top of it. Now, what person who's offering a rental is going to say no to that. You're going to come in and you're going to keep the place clean on a regular basis. They know that you're going to have cleaners coming in to clean the place, you know, and you're going to take really good care of it.
Yeah.
So, and they're going to get extra money in their pocket that they weren't expecting. So, and the nicest thing with that is then if something happens with the local laws where your Airbnb stuff is all of a sudden, you know, there's a halt to it or something, well, you can get out of your contract and say, hey, look, you know what? It's been a great run. We've had a good time, but you don't own that property. You're not, you know, actually liable for that property. You're just doing more of a sublet kind of situation.
Yeah.
So,
You're like renting it from the renter. I get it.
Yeah.
That's neat.
So,
I think
and
we're
there's
just
ways
excited.
to do that, but yeah, for sure.
To at least just like, okay, have someone paying the mortgage on that condo. And then in 15 years, because we want to retire early, I want to be done doing this bullshit. I'm done. I've been doing this for 8 years. I'm like, but we're just excited to at least have one other piece of property in our portfolio then with someone else paying the mortgage for it, because even that mountain being closed like 12 weeks a year. And like, I assumed a 50% vacancy. The bank's like, oh yeah, you can assume like 10. And I'm like, oh, I did 50. Oh, well, like I can afford the numbers on it. So that was really a good peace of mind. Plus they have their own in-house housekeeping and I don't have to do anything with keys or anything because there's a front desk. Like it's just
nice.
Yeah. I literally just plug in like the rental and hit send and they take care of it all. And being 5 hours away, it's like, oh, that's great. Like I don't have to do anything. So
yeah, no, that's fantastic. That sounds like a good opportunity.
Yeah, so I'm excited.
What kind of management fees is the resort charging you?
None.
Oh, wow.
No, I get to do everything through Airbnb. I just pay the 3% to Airbnb.
They're not charging you any fees for the front desk service or anything?
So it's all covered in the HOA. Yeah.
Very nice.
Yeah, and then the housekeeping is just fee for service. So whenever they come in and clean at the end of the stay, you just pass that fee on Airbnb. Yeah. So.
Yeah, well, my experience with ours in Montana, Whitefish Mountain Resort.
Yeah.
Fantastic downhill mountain biking, and I've got a 2-bedroom condo, sleep 6 if you ever want to go.
I have headphones in. He can't hear you.
The skiing.
This will be up on YouTube.
It's the best ski and ski out on the mountain, and we're rated number 3 in the country this year for skiing. So if you're into skiing, we can talk. But anyway, when we got involved in this, the resort charged a 40% management fee. We found 30% in town, and we've been very happy with that. So I was going to say, look around for management, but not paying anything for management, you're doing fine.
Yeah, I think I just have to show up myself, like, I don't know, a couple times a year and check on the place, which he's going to do anyway. So yeah. I guess a lot of people there try to do everything through Airbnb on their own. A lot of people live nearby or whatever. So it's in West Virginia and there's no cell service. It's like you got to be on the mountain on Wi-Fi or like nothing.
Yeah. That's
interesting. Back to your 14 condos.
Yeah.
He's already dropped the price astronomically. So
hugely.
My 2 quick thoughts is, how much room is there to increase the rents through improving the properties or finding out if he's undercharging the rent for whatever reason? Or how low will he go to make the cap rate work?
Yeah, I tried to make the cap rate work and it was pretty darn low to make the cap rate work, plus increasing the rent. Like I went up almost 5% on the rent. And then I dropped the price in half and I'm like, oh, that's better. That's like an 8% cap rate. I'm good with that. And
offer him half.
I think he'd probably laugh at me, but
I mean, obviously he's not getting other offers.
Yeah. That is
so,
true.
I mean, the worst thing he can say is no, and then you just move on to the next deal.
Yeah. So the background behind it is, it's a historic building. It used to be a hotel. And they renovated the whole place. All the condos are pretty much new. I did one of the 3D walkthroughs. And then we're actually going to look at them just for kicks and giggles on Friday, but
Mhm.
everything looks like very nice. And it's all elderly people. They're not like partying on the weekends and destroying
Yeah.
things. Like it's, it used to be strictly 55 and up. So I don't know. It's got
So
like
I wonder if the
Gerber
turnover is
carpet
because that community is turning over.
and- yeah.
That's kind of a sad thought, but
Yeah. Poor Betty.
yeah,
Or
yeah.
maybe they're moving away from it just because the rents that that population will accept aren't going to produce the cap rate.
Yeah, I mean,
So-
the rent was anywhere from like 650 to 700 a month, and then they weren't paying the dues, so that they were saving like 275 a month, not paying their dues. So it's
Wow.
like, geez, I don't know. I mean, I pay.
Is this, I mean, you said this is a B class property. I mean, like you would imagine it's
It's a historic.
I'm thinking
building
because
that
it's a
was
historic
renovated.
building and
Yeah.
yeah, I mean, that's tough. So but it's B to C class. What are other rents like in the area? Is that really
Around
low?
that. No, they're all 1 bedroom, 1 bathroom, and 650 was like the bottom number, up to 1,000. 1,000 was the max that I
Mm-hmm.
seen in the area. And everyone I've kind of like, hey, what do you know about the Kepler building? Like everyone says, oh, the rent there's so high. But like when I look at rent at other places, like it's not that high. So I don't
Mhm.
know.
Who are you asking that though? Like,
Oh, just people at work who
oh,
live
okay.
in the area. Like, hey,
Yeah.
what do you know about this place? That's how I found out it was 55 and over
Yeah.
for the longest time. And that's how I found out that it's like geothermal heating, and it was like all basically re-renovated a couple years ago.
Yeah.
So they don't
Man.
pay for heat. They don't pay for AC because it's all through some sort of fancy fountain and evaporation thing. And all they pay is like their electric bill and their gas bill, if they have extra heating. I don't know. It's weird.
Yeah.
It's intriguing. It's so intriguing because like to go from 0 units to 15 units in like 2 weeks, I'd be like,
Yeah.
I did ask the bank. I went, do you think I'm going to be like, is it crazy if I ask you this? So they just laughed.
Yeah.
Not crazy, but
It just seems like there's a lot more digging that you would need to do before feeling comfortable. And
yeah.
I mean, I'm not saying it's not worth it to do that digging. You might get into it and figure out, well, this is kind of what I'm looking for. But I would caution against, becoming attached to it.
Oh, no. This was the
Fashion,
first thing I came across that had
Yeah.
more than 4 units.
Mm-hmm.
I did find one in my hometown, but they want like, because it's in the downtown and it's a opportunity area.
Mm.
And they're building like a 5-story apartment complex across the street, and they're putting in a climbing gym, and they're doing all this stuff. And this old historic building has like 10 apartments and 2 storefronts to it. They want like $1.6 million. I'm like, you guys are crazy. First of all, because that building is not worth that much.
Yeah. Yeah.
But and again, like
Tough,
the numbers
though.
just don't work on it. But then like, oh my God, it's in a college town. It's right next to a hospital. Like it's right like in a great area. And I can't get the numbers to work.
Well, and so that's where you can look at, how long it's been on the market and, stuff like that to determine like, okay, well, if it's only been on the market for a week, they're probably not very desperate.
Oh, it's been on the market for like
But
2
if
years.
if it's been on the market forever, then, you might be able to come in at a lower offer and they say, you know what, let's do it. So if
shocked.
you can you just got to learn how to do your own underwriting and stick with that and then make an offer. And if they don't accept it, then okay, well, move on to the next one. But you have to know what you're capable of in your own business plan.
Yeah.
With a particular part,
with
property.
my new business of $0 that I'm funding with my
and that's where the relationships come in.
Money.
That's where the relationships and education come in, because like right now you need the education to feel comfortable,
Sure.
and so, there are plenty of places you can get that. You can, either take extra time and do it for free, or you can purchase coaching out there, just be careful of who you're going with.
Sure.
But basically you can, pay to play and get that stuff kind of fast tracked and
Mhm.
get your education that way. But I mean, Leslie's underwriting group, on Tuesday nights is a great opportunity to see how they underwrite properties and what
Okay.
they're looking at and stuff. So I would highly recommend that one.
Is that
Um,
on the forum somewhere tagged?
let's see. Is
Leslie's
his,
on a couple of the different Facebook pages. He's pretty easy to find, or
yeah.
um, I'm sure he'd be happy to have us give you contact information, or you could reach him on Facebook. And
Yeah, that'd be awesome.
Yeah, I'm trying to find the link if I can find my calendar.
with the 2 CRNA income, you would probably be an accredited investor, and you might be interested in investing in some of the Excite deals that come through.
What does that mean?
So
Uh,
the apartment syndications that
Yeah, you kept saying that word and I wrote it down because I was going to look it up later. But what is
Sure, so much to learn.
syndication?
Oh, so much fun to be had now.
Oh,
Here we
God,
go.
no.
You're on.
Okay, go.
All right, so
Tangent.
an apartment syndication is a fancy term for group investment. That's
Okay.
all it is.
All
So, and I compare it to stock investing. So, think about if you go and you buy some, Facebook stock, right?
Okay.
You're not going to walk into the offices of Facebook and go up to Mark Zuckerberg and say, "Hey, you know what? It's time for me to start calling some of these shots," right? Like we got to run things a little different around here.
I got 5 shares. It's
Right.
my turn.
I got 5 shares. This is my company now. No, you're not going to do that. So, but that's kind of how it is when you get into a syndication. You are buying a share of a company that is going out and finding deals, finding a property, having a business plan, going through the underwriting and the lending process and everything else, and they're going to come in, they're going to buy this property, they're going to do a value add project, implement their business plan, and then sell it later on, right?
Mhm.
So that's kind of the gist of an apartment syndication.
Can
as
I
a-
ask
Yes.
a comparison question?
Yeah.
Is that the same as crowdsourcing?
No.
Okay. 'Cause
No.
that's what it's sounding like when the way you're
I
explaining it.
understand. I
Okay.
understand where you're coming away with that. And so so essentially, several years ago during the Obama administration,
Mhm.
the Jobs Act was passed. Okay, this was, I think it was like 2012,
Mhm.
and so that actually allowed for some of the fractionalization of real estate and the crowdsourcing and things like that. So now you see these companies like Yield Street and Fundrise and all these kinds of things online. The
Mhm.
boom of that came from that. Okay.
Okay.
Because what happened was at that time, the SEC regulations were split up into 2 parts. Before, you used to have to be an accredited investor in order to invest in big time real estate like syndications. Okay. They call it, they say it's big time because they said there was inherent risk involved. Okay. And we got to protect the little guy because there's so much risk, yet they'll let you invest in as many penny stocks as you want to, but you can't invest in an apartment building that has, incredibly less risk. But anyway, so they split it up into 2 parts, 506B, 506C.
Okay.
And I have all this on, if you want to go check out my YouTube page, you can go take a look at that. I have a lot of this in videos, that I go over, but, basically 506C deals are for accredited investors only. 506B are for accredited and what are known as sophisticated investors. Okay. So people who don't have that income status, but they have knowledge of what it is that they're getting into. Okay. They understand the risks involved and they have a relationship with somebody who's on the partnership team. Right. So that's kind of how it was split up back then.
Okay.
So that allowed for the fractionalization of real estate and for these companies online to come on, and start moving. But in short, apartment syndication is made up of 2 parts, a general partnership and a limited partnership.
Okay.
The general partners are the operators. They are the ones going through and doing all of the work. they are the offices of Facebook. Okay.
Okay.
And then you've got your limited partners. Your limited partners are the money. They are the, essentially the shareholders. Okay.
Backers.
The passive investors.
Okay.
So they're providing the money to allow this whole group to purchase this apartment building.
Okay.
Okay. And then in exchange for that passive investment, they are hoping to get a return from their money.
Okay.
And so the way that things are typically set up is that the operators of the syndication will pay out either monthly or quarterly distributions to the passive investors, to the limited partners. And then at the end of a sale, we'll pay back the rest of it. And pay back profits as well. So a typical return, and I mean, this is all deal dependent, so it's not, set in stone, but the ideal multifamily investment is giving you back at least 6% in distributions. Okay. And sometimes it can be anywhere from 6 to 10%. Okay.
Okay.
And then with a projected return on your investment of 1.8 to 2.2x over the course of a 5-year period. So the idea is generally to try and double your money in 5 years. Okay.
Okay. That sounds like more people would do it if they knew about it.
You have to be an accredited investor, so you have to have a very large income or very large assets, or usually one or the other, or combination of it.
For
So that's what he was
506C
talking about.
deals.
Yeah.
Yeah. But 506B deals, that's all I've ever invested in as a passive investor, because I'm not accredited myself. I'm a sophisticated investor. And so I'm invested in 7 offerings, but it's something that, I have to have a chance to get on to into those deals. But yes, I agree with you. It's something that more people would do if, they knew about it, but also like Grant said, if they qualified.
Right.
Some partnerships, some capital operators will only offer 506C deals that accept accredited investors only. Part of that is because there's no ambiguity with an accredited investor. They have to go through a verification process to prove that they're accredited.
Okay.
Now, in your case, I'm imagining that you and your husband, if you're not individually accredited, that certainly with your CRNA salaries combined, you're making over $300,000 a year. I'm imagining that. We'll just say that you do. I'm not asking you to answer that on a recording. But saying that you do, then you would be considered to be accredited. So you could invest in either type of those deals.
Interesting.
Okay. If you are non-accredited and but you can, you've got a certain amount of knowledge here, as you've expressed in commercial real estate, you understand the risks involved, and you could invest in 506B deals. Okay.
So it's almost like angel investing, but like on a scheduled, privatized sort of situation. Like you're giving the money away with hopes of getting money back, but you're not doing it for somebody you're doing it for people you don't know.
Sort of, yeah. I can see how it would be seen that way. Yeah. But the idea is that it's you're expecting a return on your money. And you're investing in in something like I consider angel investing to be more of like getting a startup going, and whatnot. Whereas this is something that if you're doing it the right way, you're investing with operators who have already done this before. Like they have a proven track record of success for their investors. And so, they're working in markets that, fit the profile that you're looking for, that, match some of the returns that you're looking for. Some deals are more cash heavy. you know, instead of the 6%, you might see 9%, you know, but then they don't, you know, perhaps that deal, they're making up for the fact that maybe they're in a market that they don't expect as much appreciation on. So you might not be doubling your money, but they're going to try to get you your money back faster.
Okay.
You know, by giving you higher distributions, increasing your cash flow. So if you're looking for passive income to be, you know, that you can offset, then that's a great thing to be able to invest in a higher cash flow property. Whereas if you've got a time frame where it's like, well, I'm not doing anything for 10 years, I need to, you know, just maximize my returns, then maybe you invest in something that's expected to appreciate a little bit more. But you know, these are all things that as you start to look at more deals, you'll figure out how the numbers can be manipulated and worked, and you'll see some of those things.
So where are you finding these offerings for these like 506Bs and things like that? Where is that? Is it like a website or?
No, well, so there's again, unfortunately, a lot of this stuff comes down to relationships again. You know, getting into meetups and meeting people and getting to see what they're offering. And you know, there's a lot of different folks. You know, there's several CRNAs who offer multifamily right now, and I do think that most of them have offered you know, investments that are 506Cs for accredited investors only. So that's something to, you know, that again, whether you qualify or not makes a big difference for you, you know, as to whether you can invest in these deals. But what I try to do is I try to offer a mix of both, because I have plenty of investors who are interested in, you know, investing, but they're, you know, I mean, you can make 170,000 as a CRNA and you're not considered to be accredited, and so you can't invest in these deals. I think that's BS, you know, like obviously you're making a good income, and you can, you know, you shouldn't have to have $1 million in net worth, you know, so.
Sure.
Bobby, my take on the accreditation is basically you're accredited to take the loss and it's not going to destroy you, is my take on it. Because you have so much assets or so much income that you can take this risk. The government's going to let you take this risk because if you lose this money, you're not going to be ruined by it.
Yeah.
That's kind of my take on the accreditation.
That's the
other side then. I'll stay on the other side then.
Oh, well, the risk is no different.
Yeah, the risk is no different for either type of deal. That's the whole thing about it. There's no difference in risk. And when you compare it to like the stock market and things like that, there's really no comparison. It's just not as risky to buy real estate. You know, and I mean, of course, there's bad stories everywhere. I mean, there's, you know, you can buy a bad investment property. But what you get with apartments is that immediate economy of scale that you don't have when you buy individual investment properties. You know, if one property is vacant, then you're not getting paid. Whereas in an apartment building of 100, you can have, you know, 10 or 20 of them not, you know, being paid, and you're still making money because you have that economy of scale. You know, your break-even point is much, much lower than 80% occupancy. So it just depends. But what I'll do, Crystal, I'll send you a friend request, because I have some other information to send to you. And that way we can kind of chat offline, and we can, you know, I can be a resource for you.
That'd be awesome, Bobby. Thank you.
You know, that'd be I think fun to see how I can help you out with all this.
Thank you.
Yeah, no, this has been a pleasure, guys. I've really enjoyed this. So
this was great. You guys are great. Thank you so much.
And Grant, we'll definitely, you know, we'll keep in touch. I do this every month. So and we regularly have new people coming in and out, people with varying degrees of experience. You know, I've had Maricela in before, Soberanes, and she's wonderful. I've had some other operators in. So you know, you guys are welcome to come back next month, and we'll talk more.
Awesome. Thank you so much.
Yeah.
It was
thank
nice
you guys.
to meet you guys.
Nice to meet you too.
Good talking to you.
Yeah. Good talking to you guys. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On-Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On-Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.